Hello, and a warm welcome to today's event. I am Marie Bogatai, head of the AXA Research Fund and Group Foresight, and I'm delighted to kick off this event today around Professor Mike Beck's AXA Chair on Building Coastal Resilience Naturally. But before opening, allow me to say a few words about the AXA Research Fund for those of you who have yet to learn about us. We are AXA's 15-year-old global scientific philanthropy initiative with a commitment of 250 million euro to supporting and funding transformative research from around the world on the most pressing issues our planet faces today. What we also aim to do is to disseminate scientific findings to help inform public policy, but also corporate strategy through the invaluable knowledge that is brought to us from our 650 plus researchers. And it is certainly the case with today's discussion. Climate change and infrastructure development are undeniably contributing to the degradation of coastal ecosystems. And this increases the exposure of those communities to flooding, erosion, and sea level rise. We shall focus today on the role that natural-based solutions and collaboration can play together in protecting and restoring those coastlines. And to the same, and without further ado, I hand over to our moderator, who is Director of Climate Change and the Environment at the Geneva Association, Maryam Golnaraghi. Over to you, Maryam, and thank you for accepting to moderate our panel.
Thank you, Marie. My name is Maryam Golnaraghi, and I'm the Director of Climate Change and Environment at the Geneva Association. It is a pleasure to be in this webinar on building coastal resilience with natural defenses through collaboration. I am in the presence of an excellent panel, starting with Professor Michael Beck, Research Professor and AXA Chair in Coastal Resilience at University of California, Santa Cruz. Chip Cunliffe, Biodiversity Director at AXA XL. Shade Duffy, Director of Impact Management at AXA Investment Managers. And last but not least, Niels Holm-Nielsen, Practice Manager at Global Facility for Disaster Reduction and Recovery at the World Bank Group. Thank you so much, everybody. Well, as you all know, the latest IPCC report has been quite alarming, although none of us have been surprised by the results. We know that we are set to pass 1.5 degrees warming, but by 2040, human activity is driving extreme weather events. We know more about regional implications of climate, and we know that we are getting closer to some tipping points, particularly, for example, related to the melting of the Arctic ice sheets, sea level rise, a lot of major impact on the coastal areas. Over the last 20 or so years since IPCC and the UNFCCC negotiations, climate remained a scientific and environmental issue, but that debate has changed in the last 5 years. It's become a core business issue owing to the Task Force on Climate-Related Financial Disclosure that was able to define climate risk in context of physical, transition, and litigation risk that we can connect it to our daily decisions from finance and core business. Now, while climate change has had a profound impact on coastal areas and coastal ecosystem, I have to stress that it has been our development decisions and land use planning that had led to degradation of coastal ecosystems, whose very function has been to protect and build resilience in the communities. And the question is, finally, after all this time, we are starting to realize the value of the nature-based systems. And even to that point, recently the Task Force on Nature-Related Financial Disclosure has been established to bring risk of nature-based system into core business discussions through defining the related risks. Now, Mike, for over 2 decades, you've been working and conducting groundbreaking research on role of nature-based system for coastal resilience. You have worked endlessly to build critical partnership. Can you maybe give us a little bit about what have you learned and show some of the evidence of your research?
Indeed, thanks, Maryam. let me just share my screen here. Can you see my screen confirming?
Yes, very clearly. Thank you.
Okay, as I was mentioning, very much appreciate the introduction, Maryam, and a big thank you to the distinguished group of friends and collaborators here on the call with us to talk about how we build coastal resilience. As you were noting, budgets, national budgets, budgets of businesses are increasingly strained by response and recovery to disasters and climate change. A lot of these funds are destined for artificial infrastructure, such as cement seawalls that further degrade nature. We could direct much more of this funding to the environment if we can show that nature can be cost effective for building resilience on our coasts. And I'm going to briefly describe some work that we do to rigorously value these benefits and to create openings for new investments in conservation and restoration. And I believe that with some disaster jujitsu, that we can turn a grave threat to nature into an opportunity to save it. Okay, everything that we do is predicated on being able to do rigorous flood mapping locally, nationally, and globally. And this is just an example of that, so you understand where we're coming from. This is Grand Bahama Island. This is a 1 in 10-year flood event with mangroves in blue, and then the flooding that would occur without mangroves in red. And then we sum up the consequences of that additional flooding in terms of impacts to people and property. And that's a part of all of the analyses that we do. And that leads to results like these, which is a global analysis of the risk reduction, flood risk reduction benefits provided by mangroves. And we can identify the hotspots around the world where mangroves are providing hundreds of millions of dollars in annual expected benefits for flood risk reduction. So we have some idea about where to act, where to invest. And we can even show that that restoration of mangrove ecosystems can be cost effective. So this is some work that we did together with AXA and the Nature Conservancy. And we looked at benefit to cost ratios for mangrove restoration around the Caribbean. And we found that there are many opportunities in 20 plus countries to be able to find opportunities to invest cost effectively in mangroves, sometimes ratios of greater than 15 to 1, as indicated in these green bars. We have done very similar sorts of work with coral reefs around the world. This is an example from some work that we just released earlier this year, high resolution analyses of the value of US coral reefs for risk reduction. In this case, looking at Oahu, where Honolulu is. And we're highlighting here the reefs, what we call the $1 million reefs of Hawaii. And that is reefs that are providing more than $1 million per kilometer per year in flood risk reduction benefits. And again, that's gauged by looking at what the floodplains would look like if we did not have reefs. And those are illustrated here in red across the island. The week before last, we worked together with USGS and NOAA to be able to assess, well, what are the consequences when we actually do lose these reefs? During hurricanes Irma and Maria, reefs across Florida and Puerto Rico were extensively damaged by the storms. And then we looked at the consequences in terms of new flood risks from that damage. Here in blue is the damage to reefs from minor to major damages. And we're looking at San Juan, Puerto Rico here. The white bars indicate the pre-storm risk, the kind of flood risk that existed before the storms. And with the loss of these natural barriers, there were increases in risk as indicated in yellow, orange, and red bars. So sometimes really significant increases in risk from the loss of this natural national infrastructure. Okay, so that all informs a variety of different sorts of actions. And obviously I can't cover all or even many of them, but just a couple here is that we're using this information to really work on rebuilding reefs in many places. Alabama oyster reefs, that's actually me in the water there with some of my Nature Conservancy colleagues at the time. But we also work with communities in Grenada on restoring coral reefs there. So really doing some of these demonstration projects. And I was also deeply involved in the development of the first of its kind insurance policy for coral reefs in Mexico. There, the reefs were insured for their protection benefits to hotels and people throughout Quintana Roo there in Mexico, and some very important follow-ons from those kinds of activities. All right. But if I then sum up what I'm trying to do, the goals of the AXA chair, we're trying to be able to include natural assets in economic accounting so that measures like GDP account for the benefits of keeping habitats in place, not just what we take from nature. We need to rethink infrastructure investments. We need to work with nature, not against it. We need to allocate funds to repair these natural defenses. After Sandy and Irma, we maybe only devoted 1 to 3% of funding for that recovery. That's too little. And there ought to be more incentives, including ones in insurance, for conserving and restoring these natural defenses, so that in the end, we can build coastal resilience naturally to protect people, property, and nature. Thanks.
Thank you so much, Mike. I think you've raised a lot of very important issues, and one of them is internalizing the price of nature into all aspects of decision making and investing, which is something that we will talk about. So with that, Chip, after the presentation by Mike, obviously you've been, as long as I've known you, heavily working towards bringing these topics into the insurance sector for protection of these natural ecosystems. Maybe you can share the perspective and some of your thoughts of why this is so important.
Yeah, look, thank you very much, Maryam, and Mike, thanks for that presentation. Really informative as ever. So, look, I think I'll start with the fact that nature forms almost a critical component of disaster risk management and climate adaptation in more vulnerable geographies. And I think that probably not investing in nature could really result in significant risk. So I think that's the first and probably the most critical point. I mean, insurance, of course, has a critical role in providing that safety net after a disaster strikes. So although, modern insurance, I suppose the modern insurance industry has been doing this for the last 300 years, it's only recently that systems have started to be valued. And of course, by valuing an ecosystem, or by valuing anything, you should be able to place an element, or you should be able to price risk to that asset. So, the likes of coral reefs, mangroves, etc., they provide that resilience benefit, as Mike said. But they also provide economic and food security, the tourism dollar, they sequester carbon. So I think that, where insurance doesn't have penetration, and we're talking about sort of least developed countries here, or small island developing states, the impact of disasters can actually take years to recover from. Yet I think as we are made more aware of the importance of ecosystems, the recovery time for them to grow back naturally is not always practical. So if we're talking about coral reefs, the assessment and restoration of reefs needs to take place within days and not years. And so the use of things like parametric type products that can drive funding into a space like that within days or weeks rather than months is absolutely critical. And Mike mentioned the Quintana Roo example in Mexico. Actually, the first insurance policy for a reef paid out last year, around $900,000, and it paid out within 3 weeks. And that allowed those individuals that were able to go back in there and help replant and regenerate the reef itself. So to increase resilience, especially for those who are likely to be impacted most, I think it's up to us as a company and probably almost as an industry to look at our expertise to quantify that risk and provide cover for the loss of those ecosystem services. And I think that's very much a natural extension of our work. But I've got to say that this is a very nascent area of insurance, and there are only two examples. There's the one in Quintana Roo, and there's actually a new one that has been communicated just over the last few weeks or so along the Mesoamerican reef. And we at AXA are part and parcel or involved in that. But I think this is where the marriage between the research fund and Mike as the AXA chair in this has critical application. And so we're really helping to spearhead, I think, a new market that has relevance to millions of people around the world, but also biodiversity that depends on it as well. So maybe the last thing I'll say is that I think we need to continue to increase the knowledge base of both the private and the public sector around nature-based solutions. So it's not just us within our small and fairly defined area. We need to be bringing along the engineers, the architects, the planners, those that hold the purse strings, because without it, we will be working in silos, and we won't be driving and developing this area of focus.
Thank you so much. And I think you've raised a lot of important issues and how nature-based systems are becoming part of the solution for transitioning to a resilient, low-carbon economy. I mean, let's not, think about the huge role that this area is going to play. And thankfully, learning from climate change, now this field is being expedited. We will discuss later maybe some concrete examples that you can bring. Shade, let me come back to you. I mean, as somebody with deep and long experience in impact investing, how do you see these themes become part of core investing as opposed to a small portion of what institutions may be considering to invest in? What are your thoughts to the importance of this area?
Thank you, Maryam, and I've enjoyed listening to other participants. Quite an interesting panel. So you're right, I'm bringing the investor voice. We've had many years of channeling capital to the most critical societal challenges, and in the way that we and other investors measure our contribution, we measure it by the positive outcomes that we want to generate. And we also measure it by financial returns and those kind of things in terms of how we design solutions for what Chip has clearly said is a nascent area. The challenges have always been there, but now we're really thinking about how to channel solutions. We have to take account of both aspects in terms of how we put together solutions that address these challenges. So in terms of what investors want, we need to learn from other programs out there where issues that are not immediately investable, but we build a collaboration of participants around it to make them investable. And this panel for me is a very great example of how we need to start. We have the research sponsored by the AXA Research Fund. We have the science-based knowledge that Michael and his colleagues bring. We have the resources and knowledge of the World Bank, who have very extensive experience in structuring programs that start to channel and make things financially viable. And then we have investors here who are committed. And this commitment is actually not new. In the past 5 years, there's been a lot of institutional investor commitment to investing in restoring nature, because we recognize that our investments are at risk, both from a climate change perspective, but also a biodiversity perspective. We released a paper looking at the biodiversity impacts of our investments, and they were actually quite considerable in terms of what it would cost us. So increasingly, the Institutional Investor Committee is looking to channel capital to the right solutions. What we then need is to make sure that we're all working together to structure these programs, take lessons from other investments, particularly around climate change and mitigation, that allow us to give a financial incentive to investors such as us to be active. And that is a very important point, because we need to look at where the capital is coming from. There's a wide range of capital. There is foundation money, there's government money, there's DFI money, and there's institutional investor money. Now, we have both financial objectives returns around the capital we invest for other people, but the good news is that there are increasingly social and environmental objectives associated with that money too. So it's no longer about just a single view as to what returns are. It's now a much more pragmatic view of what returns are. However, our returns need to be sustainable financially. And so what would be really useful as part of today's discussions, but as we take lessons from today and start to collaborate more widely, is what are the existing mechanisms or new mechanisms we can put to place to value nature appropriately, to provide financial resilience, and to give financial incentives to investing in nature.
Thank you so much. You've pointed on some very important issues. First of all, as an investor, if you're invested in hard assets in coastlines, but with degradation of the coastal ecosystems, those assets are themselves at risk. So there is a clear incentive for investors to invest in the resilience channel, which would be those. And then the second one that I want to explore with you later on is the importance of different pots of money and how that can be best leveraged to ensure that this happens. Now, with that, I want to come to Niels, an old colleague. Niels, you and I went a long way back with the whole global movement on risk that came with Hyogo Framework for Action and the importance of bringing these issues into the development agenda. So, and now I see that you have taken it far into a lot of innovative areas such as nature-based systems. How does the development world look at nature-based system in the way of disaster risk reduction and prevention? Your thoughts on that, it's great, would be appreciated.
Thanks a lot, Maryam. Yes, indeed, and this is a topic that has come more and more into the development discourse, I would say. We see it institutionally across the World Bank Group in many contexts now. But maybe first to stress that it's quite remarkable, and we're very happy to see the increasing demand from our clients and donors for investing in nature-based solutions for coastal resilience and more broadly, really, for disaster risk reduction. From a development point of view, I think generally speaking, we believe that this type of solutions bring not only development impact, but also improve the long-term financial performance of related investments through de-risking the climate hazards around the areas where some of those investments go in. And this should, of course, over time, widen the market for existing insurance products and maybe provide the reason to develop further insurance-based solutions also related to this space. Investments in nature-based solutions, as I said, have been on the rise in the last decade. We looked internally in our own World Bank portfolio over the last 10 years. We have financed about $5 billion in nature-based solutions, with a quite rapid increase just in the last 3 years. So while this is still a smaller or relatively small fraction of our total portfolio, it's a large chunk of money that goes into nature-based solutions worldwide in the development space. And this has then institutionally on our side meant that the World Bank has increased our focus from an organizational point of view in order to position us to better address the request from our clients to better invest in nature. And you can see this at a corporate level. It's reflected in our climate action plan, in our green, resilient, and inclusive development approach. And maybe if you will allow me just quickly to try to articulate, give an example of how this works on the ground in a project context. This project related to coastal resilience, the World Bank has been working closely with the government of Seychelles for quite a while. Seychelles, as I think most people know, is a small island development state off the coast of the east of Africa. Is heavily reliant on natural capital. The beaches and coral reefs are the main pillars for the tourism industry and are critical also for coastal defenses. And artisanal and large-scale fisheries are dependent on the abundance of the marine life that relates to, or that breathes in the coastal waters. So in this context, the government of Seychelles, with support from us, are integrating nature-based solutions in coastal management to address the challenges of increasing coastal flood risk, erosion, sea level rise, but at the same time preserving and restoring the natural coast. So under the Seychelles government's coastal management plan, they are now planning a blended approach that uses some gray solutions, but many nature-based solutions like combining coral reef restoration and artificial reefs with technical assistance provided by us and other development partners. And then maybe finally, just one brief point. I think it's important to note, and this example from Seychelles may also illustrate that nature-based solutions and investments in climate resilience in general often remain a public good. So governments and development partners have traditionally played a leading role and will probably have to continue to play a leading role, but through that role, there is a potential to create the space for private sector engagement around elements of the financing and de-risking. Thanks, Maryam.
I think you've really hit a very important point. And, I mean, for years, we have seen that some of the impacts in the coastal areas have happened precisely because of the, as I said earlier, land use and development choices from local governments to support from the federal governments. And I think that model is starting to be questioned by way of increasing flood risks and so on. Mike, I want to come back to you. I mean, you showed us some very interesting slide to bring visually and financially the extent of impact of these natural ecosystems and linking it back to community resilience. Can you share with us a little bit more about what have you learned this year in natural defenses that you did not know before? What is new here?
Yeah, well, we've had some great collaborations. I've worked very closely with the World Bank for years, and increasingly now with CHIP and AXA and others, and learning a lot of different things about how to really catalyze some opportunities and investments, but also some constraints. So if you look at flooding is caused by waves and storm surge. Most of the industry's models only account for storm surge flooding, because this is the major problem in coastlines which have big shelves. So we're talking about like the Southeast US, the Atlantic portions. You can understand why we wanted to develop risk models that could really account for flood risk in those environments. But what that doesn't account for is what happens in many small island developing states, and where ecosystems like coral reefs play really important roles in flood risk reduction. Coral reefs break waves. If you've sat at a tourist beach and you've watched surfers offshore, you'll see 14-foot waves. They're out there. You might be having a drink on the shore with tiny little waves lapping up against your feet. That's the reef breaking waves, reducing those risks, but that's not accounted for in most industry risk models. And that we found in this past year actually had real significant impacts on product development, because we were seeing flood risks in our models. We were seeing benefits of reefs in reducing some of those flood risks in the Caribbean. But because the industry's risk models and industry partners' risk models weren't seeing those risks, we couldn't develop a product together to help ensure and transfer some of those risks.
This is very important. And, obviously being in this field of risk analytics, I think we need to think a lot more innovatively in terms of capturing a lot more opportunities that can be brought to bear through risk reduction or insurance. So let's come back to you, Chip. You mentioned about a few groundbreaking insurance projects that you've been engaged in. Take us through it. Let us understand who is the insured, how does this whole thing work, and how are you capturing that risk to be able to produce products? And take us through some of the details, practicality of offering these kind of products.
Well, thanks, Maryam. Yeah, well, look, I think that, based on some of the work that actually we're working on with Mike, we are looking at a sort of an ecosystem interruption insurance product. So for mangroves, in this instance, and here, I think it's very much about, we need to showcase and place a value on those ecosystems. And as I've said that before, but without doing so, it's very difficult to develop any kind of product, of course. When it comes to these kind of ecosystems, at this stage we are focusing on the resilience benefit of them, and of course we're also working on a blue carbon and resilience credit. We're working on a coastal risk index, but ultimately all these things really start to coalesce. And we're starting now to identify the kind of clients that might be able to purchase insurance for this kind of product. And through some of the work that we did with Mike last year and the Nature Conservancy, we started to determine that actually the kind of product that you could develop, if we're looking at mangroves, could actually be a combination of an indemnity product alongside a parametric one, where the indemnity one, of course, we go in there, we look at the losses that have taken place to those mangroves, and we're able to assess those losses and then potentially look to provide that insurance. But of course, unlike coral reef, mangroves don't need that rapid cash injection, or at least the rapid sort of nature of that as much. And so we could actually partly create an indemnity product and a parametric product. The question at the moment is being asked around, well, who would actually buy the insurance product? And I think it'd be great to go down the private sector route. However, there are sort of fairly major, I suppose, barriers to that, in that if you're looking at the private sector, you're actually looking at sort of maybe very small areas of ecosystems that they might own. So actually, it's more likely that in the first instance, we'll be working with the public sector, governments and local authorities, who obviously have infrastructure, have coastal communities, have their local economies that are all very integrated into the health and resilience of those ecosystems. And we're certainly working to develop some pilot projects around that at the moment, and we hope to be able to have something more to talk about in terms of an example or a couple of examples in the middle of next year. But ultimately, I think that we need to base this on scientific fact. We need that data, and we are at the moment developing a coastal risk index. But maybe I can take that into another question.
Fantastic, and I think here what I see is ultimately to link. Whether it's health of an ecosystem like a mangrove or level of its destruction, to actually what it means, related to severity of a flood and its impact on an asset. I mean, are these being analyzed and assessed? We will come back to that, but I want to take Chip's point and ask Niels about, what Chip is talking about is engaging the public sector and its development choices and protection of its own assets in the coastal areas. Now, what is your work in this, in trying to link these kind of insurance solutions to potentially, public sector clients? And let me even phrase it better. As part of World Bank's initiative to offer loans and grants to governments for development, how are you seeing these funds being distributed between the actual hard development versus development of mangroves and nature-based system that's going to protect those developments? Are you starting to see a more integrated view in development patterns these days, or what are you working with governments in this area?
Yes, thanks, Maryam. I think we definitely are seeing a more integrated view. No, I would say we are seeing that rather than a standalone view. There still is, of course, investment in nature only for nature's sake, but I think where we are seeing a larger uptake is exactly where it intersects with broader development questions. And I think that goes also more broadly related to the cat risk insurance space. No, most governments come at a risk problem from a development point of view, where the maybe transferable part of that risk problem, the part that reasonably could be picked up by the private market, insurance market, is only a chunk of it. No, so there's a broader investment need that cannot reasonably be covered by private capital or private sector involvement, and where there is a need for public sector engagement. But what this also means is that it's complex, no? And both I think both Chip and Shade mentioned earlier that it requires specialist technical knowledge, both on the private sector side and certainly on the public sector side, and on the public sector side probably across a number of different entities. And I may add also on the development partner side. And in addition to that, it requires funding that has a longer term willingness, because it also, the solutions become about management and maintenance, including around the nature solutions that are involved. And then there is the aspect of the regulatory and the policy level readiness. No, there's a lot of countries where we work where there's no existing institutional mechanisms to really help the decision makers on the public sector side interpret the potential nature solution in a similar process as they're interpreting the built environment solution. So when we engage as a World Bank group, as a development partner, we often engage on all of these aspects and try to move the needle, so to speak, across many of these elements. And I think maybe in a sense, you can sort of categorize it as three main challenges that we're discovering or seeing across our portfolio. There's a lack of data, a lack of proof of concept, no, and work of Mike and other scientists in the space are contributing rapidly to close some of this gap, but it still exists. There's much more knowledge on how tall and how strong the wall needs to be for certain types of coastal environments, no? So there's that's one area, no? Then there's the lack of capacity that I laid out, and then I think there is still a limited interesting amount of investment opportunities for the private sector to engage. So there's the whole structuring part, which has a number of different aspects of de-risking involved, where I think the public and private sector needs to figure out how to improve working together to better enable the private sector involvement.
You've raised such important points, and I want to come to Shade on this. I've spent a career of balancing public and private, towards a lot of these solutions. Now, Shade, you realize that a lot of investments nowadays are very much focused towards net zero and decarbonizing the economy, whereas we really need to think about balanced solutions that build resilience, reduce the risk, but on the other hand, help us transition. And it's that de-risking that I think Niels has mentioned is foundational to investors for investing and also for cost of capital. Can you bring the perspective as to, do you see a growing investor interest in the areas that are sort of quote unquote refers at adaptation, or still this is something that everybody sees as a government responsibility? How has this space evolved in that domain from an institutional investor's point of view?
You're right. There's been a lot of focus on mitigation, and adaptation and resilience at the investor side has been kind of a second level objective, but I see that increasingly changing. When I think of the engagement we've had from fundraisers recently, there's been a lot of talk on resilience, nature as part of building resilience. So one of the examples, were one of the first institutional investors in the first one that really looked at ocean resilience, and it brought in a lot of both private and public capital. This is the Sustainable Ocean Fund, and its whole point is about increasing the resilience of the ocean ecosystem. So the investor appetite is there. Mm-hmm. However, the mechanics, and Niels has been very, very clear at identifying the roadblocks of some of this, the flow of capital. The mechanics for doing so are not there yet, or at least catalyzing it at great scale, because we're already making investments, but they're not at the scale that we are able to or we need to do. So part of this is finding the right solutions, the right mechanics to do so. And there are very great examples that we can learn from, that we can take from the land, from investments in land and around climate change and adaptation. Because the very first thing is recognizing the value. We recognize it. The kind of work that Michael is doing is putting more numbers, recognizing theoretically, but having science-based evidence of what this really means. Once you recognize that, there are things like baselines you can establish. We need skilled engineers, we need resources, but we can actually take lessons from RED, where an acknowledgement that there is value in protecting nature, preventing deforestation, preventing degradation, and putting a financial value on that credit. Maybe we start doing more ocean credits. Maybe we call them, I've heard of biodiversity credits. But what this does is give us as investors an opportunity to invest. And without really thinking about it so much about getting financial returns from that particular project. When we use carbon credits, a lot of our investments actually return in credits. Mm-hmm. And that channels back money into the projects. What we're really interested in funding restoration. But we have to find a way to make sure that investments are financially sustainable. So having a form of credit that is backed by the United Nations, and that there's a commonplace mechanism around which investors can work. And I can assure you, given our experience with carbon credits, there are buyers out there. There are investors like us out there who would want to use this credit, who would want to recognize the inherent financial benefits of investing in nature. It's just that we need to bring all these parts together. The money is there, soft, closed beyond its initial target. So investor appetite is clearly there. From AXA's perspective, just to see what AXA is doing. AXA started a fund that was about climate change and resilience, but also actually focusing on the resilience of vulnerable people. And I would say a lot of the people in these communities are actually vulnerable. The next year, AXA increased this, doubled this budget. So it's not really about the money. When we talk about nature, we're not just talking about land. Our mandate is both land and marine. It's about the right investment opportunities that ensure our capital is sustainable and can be recycled.
Fantastic. You've raised so many fundamental points. One of them that I want to dig a bit more into with maybe all the panelists is, and you have all mentioned it throughout, it's data, data, and data. In other words, we know that there are benefits in investing and restoring natural ecosystem. Mike, I'm coming back to you on this one. You will be next on the list, but let me just make the statement here that part of it with data collection is that we haven't been collecting the right data maybe. And I think evolutions with TCFD and TNFD are going to allow us to bring more definition to what we are looking for by way of risk and what kind of information we need to be collecting. Going back to your point, Shade, is issue of taxonomy and also ultimately defining these investment into potential asset classes where maybe you can scale beyond that. So I want to come back to you, Michael. You have been working relentlessly with the government, with various players in the financial sector. Tell me, have you been able to convince these groupings that must come together and start working towards, impact that you can actually see? so far. Can you give us any examples if you have been involved in that, and how has those worked?
Yeah, well, thanks, Maryam. Great question. In the past year, the thing that I was most heartened to see is that some of the kinds of work that we've been doing with the partners here was actually used as part of the justification for a new Department of Defense program called ReFence. So the Department of Defense, through DARPA, their innovative projects arm, is starting around a $50 million project to develop some reef demonstrations around military installations to protect both the service people who are doing the work and the infrastructure there. And that's the kind of thing, and they're bringing together really interdisciplinary teams. I mean, really, really different kinds of things than I've seen throughout the whole rest of this field of reef restoration. So I'm very excited that, they're seeing, the Department of Defense is seeing possibilities here because they know very well that factors like sea level rise and increasing storminess represent real threats to security. And we've got to find innovative ways to defend some of those coastlines.
This is so important because I think you're identifying fundamental areas of critical importance to government, and security being one of them, where you can mobilize and activate these different stakeholders around the table. Let me come back to you, Chip. We were talking about who could be potentially a client for insurance products, for investing in protection. So how do you think you can gain scale within private sector clients, being tourism sectors, hotel? Is there ways that we can look at sectors that are deeply affected by these coastal risks and bring together the same kind of multidisciplinary collaboration driven by a common agenda? What are your thoughts, and what role can insurance industry play in convening and bringing together? Any examples, any thoughts, any ideas for that?
Yeah, well, look, I think that, again, it's a sort of fairly nascent area. We, as you very well know, there was an ocean risk summit that took place in Bermuda in 2018. It feels quite a long time ago now. But out of that, where the private sector and the public sector and NGO community and the science community all came together to talk about ocean risk and the risks from the changing nature of the ocean. And out of that came a couple of things. One is the need for data, as you've mentioned, as Shade mentioned, everybody's really mentioned, and the integration of that data into our understanding of risk. And at the moment, we as an insurance industry don't do that. We don't integrate the health of an ecosystem into our risk models. And so we are starting to develop an index, a coastal risk index that will launch at the COP around integrating for the first time ecosystems into those flood hazard models. That's important not just for us as insurers, but also our clients, but also those investors who have a long-term focus on risk. And if you're looking at 20, 30, 40 years in time, then they want to know what risk to their investments are going to be. So if you take away a healthy barrier reef or a healthy mangrove today, well, the asset on land in 20 years' time could be either destroyed or the incremental damage could be could increase. So I think just understanding from our perspective and then bringing others in, and of course this index will become freely available for anybody to use. But I also think, just coming back to your question around the specific nature of bringing others around the table. I think it's very much a need for the private sector to do so alongside the government. So alongside basically public-private partnerships. And one of the things that I also lead or co-chair is is the Ocean Risk and Resilience Action Alliance, where we're trying to drive, we have an aim to drive $500 million worth of investment into nature-based solutions around coastlines to build resilience for those more those communities that are at risk. And that's a 10-year focus to 2030, wanting to help 250 million people. And we need to do so with the likes of Shade, with the likes of Niels, with the likes of Mike, and others. We cannot do it alone. We have to do it in collaboration. So I think that's another, maybe a key point.
Absolutely. Thank you so much. I want to come back to Shade and then Niels. I want to also, to the points that Chip made, I have a question for you. So it looks like risk analytics in a much more integrated, cohesive way that brings these issues down to dollars and cents is going to make a huge difference in people realizing the benefits of investing in this. And I work with the financial sector, insurance sector around climate risk modeling, bringing a lot of these issues. We need to have a forward thinking perspective. I also see, Shade, a lot of traditional investors that have loads of, real estate and other investments in their portfolio. And through that climate risk analytics are starting to see this long-term risk on their balance sheet that they didn't realize. I mean, the impact of what we call physical risk of these extreme events is starting to show on banks, on asset managers' balance sheet. So how hard would it be to start justifying that investment in nature-based solutions? It's definitely one of those long-term risk management solutions investors can take. What can we do to drive that point to the investor community for it to start investing more, to catalyze that investment decisions towards nature-based systems? Some thoughts around that. I mean, it just seems that it's an obvious given to us on a plate, silver platter. What's holding us back?
I think there's a lot happening that we're not recognizing. So if we will bring the EU taxonomy into perspective, so the taxonomy on climate change mitigations out, but also the good thing is the taxonomy on climate change adaptation is out. And the climate change adaptation piece looks at this, like there's no sector there, no investment activity where they've not highlighted the adaptation and resilience needs. So in the essence, everything we do, we also now have to look at it from the lens of how resilient an investment is. So regulation, at least in the EU, is already pushing us in that direction. What we need, again, is more data. Everyone, what you don't value, where the investment industry will work with numbers. We know what these things are, and there's a lot of engagement being done and internal research being done when we're looking at some of our mainstream assets. We're invested across most parts of the economy. We're global investors, and we're invested on our clients' behalf for the long term. It is we need to make the investments resilient. And when we talk about resilience, we talk about it in terms of nature, but nature being resilient means that we're also financially resilient. So those things are coming together. But what we need to do is to have the data, the open source knowledge book and databases, so that we're doing it consistently as an industry. And I think that's part of what the EU is driving out, because we have a lot of resources within AXA. Chip's work, Michael's work would influence what we ultimately do as AXA IM. But we're universal owners. We need everyone to come together to price risk accordingly. And this is about being financially responsible investors too. So the willingness is we just have to be quite systematic about how we take account of these risks.
Thank you so much for that. And we have 2-3 minutes before we have to close. So I'm coming back to you, Niels. I remember all the tremendous work that World Bank has done to introduce the concept of risk analytics. I remember projects that you and your colleagues had in Latin America to really bring risk modeling linked to, for example, CAT modeling of insurance industry into the government decision making. So, but we know that in many countries, access to data is absolutely difficult. So what are you doing by way of a leading development organization to encourage governments and various stakeholders to actually collect, maintain, and share the data that's needed by private sector to be able to bring these into the type of risk analytics that our colleagues talking here to start making collective decisions? How are you pursuing the data issue in the development world on these topics of nature-based systems?
Look, I mean, that's a fantastic question with a very long answer. But in short, we are doing quite a lot. No, certainly at several levels. At a global level, we have been pushing open data criteria. We're pushing out data and data standards for open data, which we hope will enable governments to pick up on this. At a national level, we have countless conversations and support programs with governments, both around spatial data, which is a critical part of understanding and modeling risk. But there's really many different types of data. And often what we see, it's the data integration at the government side that's a challenge. Of course, there's governance challenges and there's financing challenges. How do you continue to collect the data you need so you can create information over time, which is critical, again, to understand risk and how risk changes. So that translates into capacity development and investment support at a national level, both for the generation of the data, but for the management of the data, the governance of the data. There's a regulatory element to this around what can be shared and with whom. No, we have governments who in specific offices feel that a specific piece of information is theirs only, and they hope to sell it one day to someone. And so it kills a potential for value added across a number of agencies. I've worked with very, very tiny governments who within one ministry have had 6 different entities with the same ministry collecting information related to water, but with no integration even within the ministry. So we're doing a lot. The challenges are big. And I think it's beyond the data, though. I wanted to make one point here, Maryam, that hasn't come up, I think, enough here. I think a lot of the problems we're discussing sometimes can be understood as a private problem. It's the potential downside on your balance sheet over time. But most of the solutions that are needed are public in nature. No, it's many different pieces that need to move at the same time, and that on its own limits the ability to action. No, because it's no one's problem enough that they will take the action to solve it, because they don't control the action of everybody else in the system. And I think really that to a great extent, it's essentially a governance problem. No. That it requires a collective action that someone needs to help organize and put in motion in order for all the private actions to play out in an efficient way. And of course, data and information is critical for this to happen. But I just want us not to forget that governance element, which is absolutely key to the solutions here.
Absolutely a key point. In fact, we just finished a major study on flood risk management in 5 economies. And honestly, it boils down to that everybody is part of this chain, but nobody has that full ownership. And when one part of the chain falls apart, the whole thing falls apart. So I think you really have put your finger on something extremely important. So thank you so much for this discussion. We're going to be closing, but I want to now come back with this collection of thoughts and actions from different viewpoints. What is it that we must do moving ahead? Mike, as somebody who relentlessly working on advancing our knowledge and making partnerships happen, where should be the focus? What should happen for us to really start moving this dial in a noticeable way?
Yeah. Well, I mean, the short answer is we need more innovative demonstration projects. So I've appreciated very much the World Bank's long-term leadership in catalyzing nature-based solutions. That's been really important, and AXA's accelerating leadership in this area. I'm also very heartened, just as we were describing here, that a variety of government agencies are garnering a lot of interest here. That's Department of Defense, FEMA, Departments of Transportation in a variety of countries, the Army Corps. So there's a lot bubbling, but it really needs to turn into many more demonstrations at scale.
Excellent, thank you. So what about you, Chip? What you think is going to move the dial, building on what Mike has said?
Yeah, thanks, Maryam. Well, look, I think that we are still at the start of this journey. I think there's a long way to go. I think that the link between science and an industry needs to evolve more quickly. So going back to what Mike's really saying, you know, there is the application of science in practical ways, and I think that's absolutely critical. But I think we need to do so working at the local level, alongside working, you know, from sort of the top down, because if it's not going to work at that local level, then it's not going to work. So we need to have that practical approach. And I think for me, those are the really sort of two critical areas that we need to focus on.
Thank you so much. So Shade, would that get us there with what you've heard? What is going to get the investor world to push the dial?
We need science from Michael and his colleagues. We need the World Bank and other DFIs and public bodies to play a coordinating role in putting the right structures in place. They've done it before for other challenges. They can do it again. We need the right incentives that give private investors a rationale to go into this space. We want to, but again, I emphasize sustainable finance is also part of our mandate. And once all of those things come together, I am quite confident that the money will come, because we've seen it come in other related spaces. But what I also want to emphasize is I really agree with Chip's view on local communities. In everything we've done in nature-based investments, when the voice of the local community is absent, the project is not successful.
Thank you so much. Thank you. And Niels, I think that puts a big burden in terms of governance, you know, when we have so many local communities and this has to happen locally, yet, you know, it needs to be supported by a very strong governance. How are we going to break this code? How are we going to scale? I think this is one of the million-dollar question in the world of development. Any last thoughts on that?
Well, I agree with my colleagues here that I think the World Bank can play a big role in this together with other partners. We recently launched a global program on nature-based solutions for climate resilience, and this should increase our ability to connect science with action, to connect the technical partners, the industry partners, with governments and with communities on the ground. I think we often find that the communities on the ground have a pretty advanced understanding of the value of the nature within which they live. No? And so in that sense, they are not the most complicated of the many stakeholders in the equation to help bring along on the idea that nature has a key value for resilience. And I think if we continue to work down this path, the World Bank, I agree with what Shade said, I think the World Bank can help develop and showcase approaches, maybe help create a solid pipeline of engagements that involve nature-based solutions that become more attractive, and maybe help us get towards scale where the private sector can engage at a level that's more efficient for the way they operate. No? So I look forward to continue to work with AXA, to continue to work with Mike, to continue to work with a number of other partners in the industry, and I hope that we can collectively move the needle on this.
Super. Well, thank you very much to all of you for this exciting conversation, and thank you to the audience for tuning into this AXA Research Series webinar. I hope you've gotten some helpful information, and with that, we thank you all and we say goodbye.